Morning all, how are we doing? Morning Neo, Johannes, Forex Machinist, Diamond, how you doing? Welcome to another Wednesday. Not particularly exciting day today, not much news. We've got US news today, New Zealand, basically that's tomorrow. So yeah, not much going on today. Excuse me, I got frog in my throat again this morning. So yeah, nothing news-wise until 1:30. Then we've got pending home sales at 3. We'll probably get some volatility off of those, but nothing dramatic today. Nothing much on the news overnight. Russians circling scraps gas shipment to buyer on payment issue. Okay. Yeah, nothing much overnight. I've had a scan through this morning. GDP growth, etc., blah blah blah, same old stuff. So yeah, nothing really exciting there. Some natural gas, didn't see that. Following June 8th incident, Freeport engineers completed detailed assessment plans, resuming operations. Yeah, so nothing exciting today from a news perspective. So we might find today is a little bit of a grindy day ahead of GDP tomorrow for the US dollar, and we've got Jackson Hole starting tomorrow as well. So be prepared for potentially boredom today. Morning Sammy, morning Hank, morning Phil. Right. Quick recap of yesterday before we get going. Did 2.58% yesterday. Massive day, which is my whole week's target hit in the day. I don't know what's going on this month. I feel like I must have trodden in some dog poo or something. I've just been milking it this month. But so I'll quickly run through the trades from yesterday. There's not actually that many I closed out yesterday. Euro New Zealand, I think there was 2 on that. No, just the one. That was the final one on Euro New Zealand. Yeah, because I closed the other one out the day before. So closed my final Euro New Zealand trade out from there. So that was the previous day's trade, and that one I closed out yesterday. I've got one more on it now. The EA got me into another position short on it. I'm always happy to be short on the euro. I don't really care where I get in. So I am back in that again. Oil, closed out a few oils yesterday. So there's all the trades on oil closed out yesterday. Multiple positions. That was closed out kind of midnight, that one, but so yeah, closed a few out on the push up. So I think we've got the peak formation low end now. We are on day 1, 2, 2.5, 3 up. This is what we've got to beat. What I'm worried about with oil is sticking in the range that we've sort of established. So we've got this level here, which was kind of support resistance. We accumulated and went into balance on that area for 3 days before we finally broke it. Then we took a week or so to push back up and retest it, and it failed. And now we're back here again. We've gone into an accumulation yesterday back at this level. So this is a real key level here. We need to break this 95 a barrel and break it significantly and get this move started. If we get stuck at 95 a barrel, I get the feeling we are going to get stuck in this range that we've been in for the last 3 weeks, or 2 and a bit weeks. So today is really key on oil. I've only got 2 positions on it at the moment. I'm TPing on these before we get to ADR at these highs, because once we break this 95 a barrel, this is the next sticking point. Yeah, so that is the next resistance, which is kind of 97. So at 95, 97 is this $2 range here is really where we need to be concentrating on oil. If we get that break, we're off. And I think we've then got the legs to open up a big move. But with what's going on in the economy and everything, there's a lot of pressure on the oil producers to keep prices low. So we may find that we kind of get held down in a balance down here. There's a lot more participants coming into the market to supply energy all over the world, like Canada, saying, yeah, we could, if it's logistically possible, we're happy to supply liquid natural gas to Europe. Never done it before. So with what's going on in Ukraine, there's a lot of new players entering the market. Not new players, I mean, they're established players, but they're just entering new global markets. So we will see. So today's very, very critical for oil. So I got out of those yesterday. This high here was my target to get out, and then obviously up here was the second target. Now I'm looking for that next push. So we'll see what happens with that one. And the main bulk of my money was made yesterday. I didn't trade any DAX yesterday on US dollar Swiss. So US dollar Swiss was being a pig. So obviously this entry down here, so I'm short on this basically. So this was my first initial entry on it. We then pushed up, so I got into another position. I got to another position there, and I got into another position up there. Then we pushed it back down. I entered again, assuming that we were starting to come back down for this gap fill, which we didn't. We then pushed up again, so got another couple of positions on. This was an aggressive drawdown control position, because this, I had 1, 2, 3, 4 positions, 5 positions, sorry, which were a little bit too close together. So I needed to do something about it. So I entered one aggressive there. You can see this is a 0.7. I had 1.49 lots short on at the time. So this is 50% of my overall position. We had the news yesterday. So the plan was the news catalyst would dump the US dollar, and did it dump it? So I got in just before the news with an aggressive position as it started to roll over, and then it just collapsed. So I got out of that aggressive position here, 50% into the move, which helped me to do drawdown control on these two. So these were 0.35s, both of that one and that one there. So as soon as I got that aggressive drawdown control into enough money, basically, which was down at the Asian low, to help me do drawdown control, I took a 0.15 off of both of those. Then we got the continuation move down, so I exited those two positions down there. And as you can see, my break-even's now well within an ADR. But more importantly, I've got smaller position sizes on it, and I've only got the 2 positions. So I'm back to much more manageable condition on the US dollar Swiss, and obviously I managed to bank a load of money along the way. So yeah, so that was yesterday. I still like US dollar Swiss short. We've massively, you can see, what, 1, 2, 3, 4, 7 days up now. Well, this was the 7th day up. It didn't end as an up day. It ended as well, you'll see on the daily chart, ended as a doji. Beautiful doji. So this is typically a reversal or a pause candle. So dojis will form one of 2 things, as in here. You'll either get 3-bar reversal off of them, or you will get a pause and continuation. So today will be a telling day on US dollar Swiss as well. But I suspect after this massive rally, we're going to want a profit take on this, aren't we? We need some. There's a lot of people in here going, I'm loaded. As soon as they see this turning bearish today, they're going to dump their longs, turn short, and we're going to get a flush. If that happens today. So we'll see. We'll see if they dump or not today. There's no news, as I say, today to drive it. We've got durable goods, which is rubbish. Pending home sales is rubbish. I'm expecting this to be down. They're forecasting minus 2.6. I think that's going to be worse than expected based on new home sales. New home sales are down. Building permits were down previous, and I would imagine pending's down. The bubble is bursting on the property market as well. So yes, we should see some decline in the US dollar, hopefully, gradually. Currently, I have some profit on Aussie dollar Swiss, considering to exit it. So Aussie Swiss I've got on my Forex funds account. At the moment, it's, you see I've got the chart up here because I'm watching this one up a hawk. At the moment, this is the aggressive position I took yesterday on this one. It's in profit. I don't know what your situation is, but if you're in profit and you're happy with it, take it. It's a trade. Yeah. So if you're short, try not to worry about where it's going. If it's gone far enough that it's got 0.5% or something, put it in the bank. Your job is to make this green every day. Yeah. So if you've got 0.5% in profit, stick it in there. You can always add it back on. If Aussie dollar Swiss pushes up again, you can always add that position back on after you've taken it off. What you can't do is if it's in profit by 0.5% and then it comes back to break even, you can't put that 0.5% in that bank. So, so yeah, if you took this reversal alert yesterday, yeah, I mean, you can see I've got mine at break even, only because it's an aggressive position. The stock was up there on it. As it's gone into profit, I woke up this morning and we woke up about here. So I've just moved it down to protect it. If it pushes up today and takes me out, that's fine. I'll get in again. But I'm not going to let this 0.6 go into drawdown. And I'm not going to bank it either because it's not enough. So the idea of aggressive drawdown control is to get a position and a profit large enough that you can put that over there and use it to do some work over here. This isn't big enough for me to do anything at the minute. So it's not working yet. The Aussie overnight, we went into accumulation. We haven't gone anywhere. Don't forget now we're in the UK session. The Swiss franc is going to be manipulated today and the euro. So what happens with the euro and the Swiss franc today will decide what happens with that. If we can get some strength off the euro and the Swissy today, this is coming down and this will come down, you know, it comes down that fast, that hard. Look at where I am. That's all I want. Little push. I don't even want an ADR. I want quarter of an ADR push. That's all I need. And I'm done with it. It's wrong at the moment. But you look at it, you know, look at the big picture. Look at where we are in the big picture. There's much more downside than there is upside. And if we do get up to that upside, that's likely where we're going to be coming down from. But my Forex funds yesterday, I banked 1.88%. Similarly, good day, obviously, because I'm trading similarly. I've just got drawdown problems on this account at the minute. I've got a 5% max DD because it's a prop firm account. So this is the problem with position trading prop firm accounts. I can't control this. The market wants to push against me for a little bit. It's going to push against me for a little bit. So I'm hoping today we can make some inroads into this and I can get... I want to try and hit target as soon as I can. So by the end of this week, I want this at 8%, ideally. So I'm holding on to things a little bit. And then when I get to that 8%, I'll see what I've got here and I will just manage these individually and I'll turn the EA off on all of these positions and stop the EA trading on it. And then I will manually take over and manage all of these ones that are in drawdown and just work aggressive drawdown to get them back to break evens. Because if I can get them back to break evens, that's target hit. That's the plan. But I've got a couple at the moment. Pound New Zealand and Aussie Swiss really are the two that I'm focusing on, which is why I've got the Aussie Swiss on. The Pound New Zealand, I've got a pending order set, which I put in this morning. Oh, no, I didn't. What did I put a pending order on this morning? Oh, US dollar Swiss. Yeah, so US dollar Swiss I put a pending on this morning on this account up here at the highs. So if we push up and do a liquidity run on yesterday's high, because this is obviously a doji, so we're going to have potentially a lot of people starting to exit their longs. If they see a stop hunt, they're going to start shorting it, and then we should start that cascade down. So the two plays today are we just basically come down, and this is just a peak formation high, and we reverse, or we're going to do a liquidity run on that area in reverse. So I've got a pending up there to get in, which brings my average up to here and gives me a nice easy quick out if that starts to drop. So yeah, so pound New Zealand, the other one that I'm in on here, I need to get something aggressive started on this, but it's difficult at the moment on this one to find a decent level. We're kind of flagging at the moment. The pound isn't quite as weak, and the New Zealand isn't quite as strong as I was hoping it was going to be. We are putting in down days. So that one there was a slight up day, then we went down day. Now we've gone sideways. We're starting to push up this morning, so the movement is very, very slow on it. So I'm just trying to find a level to get aggressive on this. The only one really I think is going to be up here, which is the previous day's high and the next previous day's high, there and there. So this area here in this propulsion gap is where I'd look to get in an aggressive. So what have I got on it? Might as well put that in place now. We are 0.68, so I'll go 0.4 up there. Just under there. So if we are going to push today, I'm going to get an aggressive position close to ADR, which will obviously bring the average up closer. You see, I'm not worried about this on my account. If I was trading this in my own bank account, my own trading account, I haven't got a problem with it because it's well within an ADR. As long as my average is well within an ADR, you know, that's no problem. Market's going to do that just by trading. It's going to get down here at some point. The problem I've got is I've got a restriction on me put in by the prop firms. So I've got to manage it more aggressively, faster, unfortunately. But we'll see. Anyway, so that's my Forex funds. That's how that one's doing. My own account. What happened to the DAX? Blimey, DAX is pushing this morning. I was just going to say, I was just about to take a DAX off. Not anymore. So I've got one DAX on, I've got one Euro New Zealand on, £1 Swiss on. I've got 2 US dollar Swisses and 2 oils. Pretty much break even. So got some risk on, just not going anywhere. So we'll see what happens today. But yeah, 22% month. I just wanted to point this out as well. I put it in the Telegram group this morning. You know, I've had the EA running. Everybody asked me about the market reverse alerts EA and set files, and I keep saying this is not set yet. This is an EA you use to trade market structure and trade position trading mainly. But I have this signal running on the MQR5 market, which I've had for ages, and it's been running for 46 weeks, and it's now double the account. I have had to intervene ever so slightly. That was during Ukraine, but it's doubled the account. And this is just running the H1M5 set file. So the set file that is on the product, that is what that's running. Okay, so, but I just wanted to show it basically because I've been sitting there. I haven't paid any attention whatsoever to this at all. This has literally just been sitting on my VPS. It's this account here, this IC Markets. It's this one. It's been sitting on here, just running these pairs on its own, unattended, within reason. I mean, Ukraine is the only time I looked at it because I was interested in what it was doing, and it took 50%, well, 48% drawdown because it's, you know, a world-changing event. But it survived it, and it's got through it, and it's doubled the account. So turned a 10k account into a 20k account into a 40k account. So there you go. So I just wanted to show you that because it's hit a milestone. Woohoo! How do you know the news? How did you know the news would dump it? I didn't know the news would dump it, Hank, yesterday. No idea. But that is part of speculative trading. That's why they call it speculating. You're putting money in the market and you are speculating on getting a return, and that return will either happen or it won't. If it had pushed, I'd have been stopped out for about 0.25% loss. As far as I'm concerned, with any news event, you have a 50% chance of it going the right way or not. No idea. But yeah, it was poor. I was expecting some kind of manipulation down purely because of that. So even if you get positive news, and you'll see this happen a lot, if you get a positive news result, the market will still dump on a positive news result because it needs to. And the banks will use the liquidity that is sitting in the market around news events to basically manipulate the price. So this thing could carry on its current course and trajectory. You know, it did it there for a long time, didn't it? Eventually, though, you will get a break, which is big enough to get out on. And this is the whole ethos behind position trading. It can't go up forever because the people that are buying it here have to get out of these positions to make money. If you don't get out of your positions, you don't make money. There's no point in the market. So eventually, these guys will start to take profit. When they start to take profit, we will be taking profit along with them. We just don't know when they're going to take profit. This is the banks I'm talking about as them. So I didn't know it was coming down. I hoped it was, obviously. Your real bank account has almost 1/10 of the drawdown of your prop account. Yeah, but it's, you know, this is the thing. I'm running two accounts here with the same strategy, and this is a really good example of, you know, you give 10 people the same strategy and tell them to trade it, you will get 10 different results. Yeah, I'm running the same strategy on 2 different accounts, and look at the results. This one's sitting in 1.96 drawdown with 6% return this month. This one's sitting in 0.3% with a 22% return this month. Yeah, it depends what you get into and when you get into it. And this is why I keep saying, you don't designate what you make as a trader each month. The market does. If the market is kind to you and you just happen to get in at the right time with the right position and the right size, you will make more money than if you get in with the wrong position and the wrong size at the wrong time. You can't control the timing of the market. The market will move where the market will move, and no amount of technical analysis is going to make you a profitable trader. Yeah, technically, this support resistance area here should have held. It didn't. It flew through it for 8 hours. It was wrong, and everybody got killed there. Everybody, you can see, if you look at this on a 15-minute chart, you can see everybody getting killed. Yeah, let me draw the support resistance in. Yeah, so that's the support resistance. Yeah, it hit, and immediately as it went through it, there's a bearish engulfing. What does everybody do? Short it. Yeah, everybody shorts it. Yeah, it's a false breakout. It's a false breakout. Oh, it's coming down from here. Their liquidity's sitting there. They're all dead. Pushes up hard here. Collapses. How much money do you think is sitting up there right now at yesterday's high? On everybody that shorted that. This is a fundamental news for the US dollar. Everybody's like, well, the US dollar's coming down. Do you think it's more advantageous for the banks to do that and then that or that? There's a shed load of cash sitting up there. I don't know what they're going to do. They might do that because they may have balanced their books there and they don't need to come up here. I have no idea what they're going to do. But, you know, it's just, if you're in the market at the right time, as I was yesterday, you'll make more money than if you weren't. You know, it's just a timing thing. This is what you know, like we were talking yesterday about how you decide on whether you're going to go long or short. You can flip a coin if you want. Look in a magic ball. You could get a magic 8 ball and shake it. And if it comes up with that, you go long. If it comes up with another one, you go short. It doesn't matter. Hit the buy or hit the sell. It will go up or down. I haven't got a clue which way it's going. I've got an idea based on where it's been. and fundamentals. Euro Swiss has been coming down for years. I've got an inkling that it's going to carry on doing that because there's nothing fundamentally that tells me the euro is going to power up. So therefore, it should continue to come down. But there's nothing to stop Lagarde coming out tomorrow and saying, actually, we're going to put interest rates up by 1.25%. The euro is going to fly through the roof. But until that happens, I'm shorting it. Yeah, but I don't know where to get in short. Yeah, I'm short on the euro New Zealand at the moment. I don't know if this is a good place or a bad place. I haven't got a clue. It'll either go down and I'll take it, or it will go up and I'll add and I'll take it the next time it comes down. You know, you've just got to relax about taking trades. And, you know, when I first started doing the live room, as I said yesterday, I would just basically say to somebody, give me a pair, and then give someone else, give me a direction. And I would just go with a 0.01 in it. And I would hit the button in the direction. And then by the end of the day, I'd be trading the 1 minute or the 5 minute chart. I would come out of it with a profit. It doesn't matter which way you get in. And as I keep saying, as long as the market moves, market structure is present, we will always have an in and an out. I've just no idea when it's going to happen. So yeah, you know, if every strategy will have a different result from different people, which is a long-winded way of what I was trying to say. Anywho, let's get back to trading. I got your reversal on DAX. I got reversal on DAX, took it, but now is buying. Should I close it? I don't know. What are you trading? Are you position trading, or are you trading with a stop loss? I can't answer that question. Do you think you should close it? Where do you think DAX is going? Is the answer, is the question, isn't it? Remember I said yesterday, now we've started this down move. One of these down moves is going to turn into a control candle. If the low of that control candle gets broken, as it did yesterday, we shift. That is now in control, this candle here. So it could well stay in there. So if you're short now here and it's pushing up, take another short at the high and then take another short at the high there. Pretty sure at some point it's going to come back down there and give you an out. So it's up to you if you want to get out of it. Do you want to position trade it? I mean, right now I would stay in it instead of whacking great bearish engulfing after a push up, and they didn't manage to get past that high. But we may well see a movement like that. I don't know. I can't answer that question. And that's what I get asked all the time. Everybody comes into the group, don't they, in Telegram, and says, gold, long or short? And I always flip a coin and say long or short. I've no idea. Couldn't tell you. I'm not much help, am I? Right. I'm going to whiz through all the pairs today, and we'll have a look at everything and see where we've got to this week so far. There's no ADRs, no weeklies. I'm surprised nothing's hit weekly yet. We're on Wednesday. We've had some decent ADR moves this week, but they all kind of reversed fairly quickly. So all the ADR trades today have kind of all played out within 48 hours, which is fantastic. But nothing's hit the weeklies yet. Monthlies haven't really changed, and it's obviously we're getting towards the end of the month at the moment. So nothing to look at there. The hourlies, what's that? Oh, that's my ADR dash. So I've set up another ADR dash for the indices. I was just doing some analysis yesterday on hedging strategies. I don't know if you were in the Telegram group. I showed my P&L yesterday. Futures. I've got two funded accounts with Apex. One of them is sitting in a nice profit, and I'm not touching it because I want to do a withdrawal. The other account has been sitting a little bit dormant because I just haven't had time to trade futures. But yesterday I tried a new strategy on futures. I posted my P&L at $1,700. I ended up at $2,200 yesterday using a hedging strategy. So I thought, I've got this other account there, I'll have a go at a hedging strategy, which I kind of knew of, but I'd never tried. And I did 2.5 grand nearly yesterday using it. So I've basically looking at the ADRs, it's all basically ADR based, the hedging strategy. And I'm going to do some more research on it. I've got to go out today, so I might not get a chance, but I'm going to do some more research on it in the next couple of days and see if I can put together the same thing as an EA in here, in the CFDs. And it just basically revolves around very simply using pairs, not pairs really, but using instruments that are correlated. So for example, NASDAQ and the Dow and the S&P are all correlated, i.e. they all move usually in the same direction at the same time. And the whole strategy simply is really, really simple. It revolves around setting a pending order either side of price. So where we are now, set a pending order there and there. Whichever one gets filled, these are longs, by the way. Whichever one gets filled on one instrument, on the other instrument, you go short. Exactly, not exactly, but as that gets filled, I hit the sell button on the other pair, right? So I'm long one and short one. Because of the difference, although they're correlated, these markets, yeah, they don't move at the same rate, right? So the NASDAQ, the S&P and the Dow will all go up at the same time. Yeah, so when you look at a daily chart or an hourly chart, you'll all see pretty much the same market structure, the same price action playing out. But what you will see is a difference in their average daily ranges. Yeah, so we've got a speed differential. The NASDAQ moves way faster than the S&P. So all you're doing is you're waiting for the point where the NASDAQ has overtaken the S&P by a certain amount because it moves faster, and you have a positive balance because you're long one and short the other. So you will have a point where you're going to draw down, and then it will come back to break even, then it's going to draw down, and then it will go into profit, the hedge, because one will be in a loss and one will be in a profit. Simple hedging, that's how hedging works. But all you do is as soon as it gets to a monetary amount, and I set mine to $50 in the futures market, it automatically takes $50 off. So it basically just hedges until it reaches that profit, and then it just closes it. And I did this yesterday, and I was playing the NASDAQ and the S&P. And because the NASDAQ is so fast compared to the S&P, I haven't got... Let me just open Jigsaw. Where's my data? There we go. Right, so this one in the middle here is the S&P, is the NASDAQ, and the one on the left is the S&P, and the one on the right is the Dow. You can see the difference in speed. Yeah. This line is the central line. You see how much further up we are there as we are there. Yeah. Sometimes this will go up so fast that that $50 target, actually, it just banks $200 or $350 in one case. It just banked because this moves so quick. By the time it said, right, okay, I got $50 in profit, this thing had gone up to $250 in profit. This had dropped by 2 points and knocked 100 off of it. And all of a sudden I'm banking $250. Yeah, it's basically ADR arbitrage, if you like. Yeah, but it's hedging. This is what hedging is. Hedging is taking opposite positions. But the Dow also moves way faster than the S&P. So all you're doing is I'm entering 2 contracts here, 5 contracts here, and 2 contracts there. So I basically would go, I'll do one now quickly. Well, everything's in the wrong place. I can't find my... order entries. So NQ. So if I go long there and long there, basically just wait for one of those to trigger. There we go. And then I short this one. Okay. So basically now what I'm doing is I'm sitting on two positions, yeah, in drawdown at the moment. And I'm saying, when you get to $50, shut the lot down, make me some money. And that's literally all it does. It will sit there now, waiting for the NASDAQ, waiting for basically the market to drop. Oh, this thing is awful. This is the problem with Jigsaw. This thing in Jigsaw does this all the time. It drives me up the wall. There's a bug in Jigsaw. Ah, done it again. I don't think I can be able to show you because Jigsaw's absolute crap at the moment. I'm going to write to them about this because this does this all the bloody time. Is that? Oh, it's done it again. Look. But anyway, that's what you do. I really want to show you this. I just want it to work for 1 minute. See if it can stay alive. Oh, God's sake. Right, anyway, so just watch the P&L. There. So what this is doing is it's waiting for this to get into profit by $50 more than this one. And then it will just shut the lot out for me. In New York, this happens a lot faster. We're in Frankfurt at the moment, so it's slow. But you can use that. You can do this on any pairs really, and any instruments that are correlated. The treasuries are also good to do this on. So we're $200 odd in profit there, with 250 there. But you can see how fast the NASDAQ moves compared to the S&P. So as long as you've got one faster instrument and one slow instrument, that's it. And if you see, I've entered with a two contracts here and a 2 contract here. If you went in with a 3 contract, this would happen faster, but you risk more drawdown. So there's a safe way to do it, and there's a kind of aggressive way, if you like, doing it as well. It's going to be a lot slower. I didn't do this in Frankfurt. Obviously, the market is a lot slower in Frankfurt than it is in New York. There we go. It's closed. $55 profit. See? Job done. Rinse and repeat. But anyway, so that was that. I just wanted to show you that. I haven't put it in the futures group, no, because basically I was just mucking about with it yesterday, and I wanted to try it and see how it got on. But it's a very risky strategy, is it? FX Gladiator. NASDAQ can move 7% compared to the DAX. Yes, that's why I've got the ADR up here. Yeah. So you adjust your contract sizing. It's risky if you enter with the same monetary value per tick. Yeah, you're going to go into drawdown ridiculously fast. But you need a hedge. You need a hedge lot comparison basically to make sure that you get in with the right monetary value per tick. You will find, and this is the analysis I did in a spreadsheet yesterday. I downloaded all the tick data from investing.com and I back tested it. The NASDAQ there are times when this doesn't work, and that is earnings. When we're in earnings fortnight, you get a lot of divergence on these three, because you'll have earnings on oil or machinery related stocks which will affect the Dow, but they won't affect the Nasdaq, so they become uncorrelated. So you can only do this when we haven't got earnings season happening. But when we're outside of earnings season, the Nasdaq doesn't get any more than 0.5% ahead of the S&P as a maximum. And if you calculate that on a lot size of 2 contracts in the futures market, that doesn't equate to more than $1,000 in drawdown. So if that was to happen, and it doesn't happen often that those guys get uncorrelated by that much, you would have to sit in drawdown for a little bit before they became recorrelated. But look at them. Yeah, these 3 markets do the same thing. I'm flicking between 3 completely different markets here. Look at the price action. Yeah, but look at how the movement is different. We've got 430 pips. We've got 63 pips. We've got 269 pips. So you enter with a different contract size, different lot size. That's it. And that calculation is what I was working on yesterday. I went in with 6 contracts on the DAX initially, and 2 contracts on the S&P, and it went into about $800 a drawdown. Then it came back and banked me way more, but it was the wrong thing to do, because it was far too aggressive. So you can be aggressive with it, and you can be very conservative with it as well. So anyway, I'm going to work on it. I was doing a lot of reading up on it. It's called legging as a strategy, and I was quite shocked as to how many people are actually doing it. There's a lot of pro Forex traders are legging the mainly the bond markets, because they're so slow. So anyway, that's why I've got this up. The whole waffle there was basically because of this dashboard. That's why I've got this dash up, because I wanted to know what the ADRs were and the CFDs. But anyway, ignore those. I'll come back to that at a later stage. I need to do more research into it. So yeah, ADRs, we've got nothing. Hourlies, we've got nothing, because obviously we had a lot of reversal moves yesterday, so anything that was extended on the hourlies is unextended itself. So keep an eye on this today. 4 hourlies, a lot of these are undone. So where I was saying yesterday on the pound pairs and the euro pairs, these are all massively extended. You will probably get a pullback on them. They are probably good trades. They're just not for me. They all worked. So if you took them, fantastic. Well done. They just weren't for me yesterday. I didn't want to long them. Right. So looking at these quickly, Aussie New Zealand. We are obviously very, very extended. I'm looking for longs on this, so it's not really something I want to take short at the moment. It is a beautiful propulsion gap hit, but it's not really a propulsion gap, because this wasn't really an accumulation. It was a 12-hour move, but it was more of a reversal than an accumulation. So but we are finding some selling pressure starting to come in. It's more realistic that they'll take out that high before they drop. So I think you'll probably get a little bit more of a squeeze on it before it drops. But I'm looking to long it out the lows. CAD Swiss, just starting to roll over now. What's that one? Swiss franc strength. Yeah. Excellent. So we've got Swiss franc strength this morning. So Aussie Swiss, sorry, CAD Swiss we're looking at. Was I on CAD Swiss? Why did I do Aussie Swiss? Oh, because I'm doing these, aren't I? Wake up. So I was just going to go through all the pairs, and I just realised I was doing the dashes. CAD Swiss just starting to roll over. I'm long CAD based on oil. Swiss franc I'm long on as well. So, you know, we're getting the Swiss franc push at the moment. Swiss franc, when it goes, will push everything regardless. Doesn't matter what it is. If the US dollar is really strong and the Swissy powers up, it will beat the US dollar. So you can't stand in the way of the Swiss franc when it powers up, but it is temporary usually. So this is a long against a long, which doesn't give me any directional bias. Long term, at the moment we are obviously looking for shorts. So this is actually a really good short opportunity. My bias is just wrong on it, so I haven't taken this one. I've got other Swiss francs on, which I've got a better bias on. So, but if you took this one, the reversal alert on this one was literally late last night. M5 was the same one. That's all starting to play out. Euro CAD, that was the massive embedded short. Again, bias on this one for me is that. So I do not want to be longing it. I want to be shorting it from up here. It's struggling a lot down here. We got this double bottom, which we got that reaction at, and then they came out and took everybody's liquidity. We had the big spike up on the Euro news, which was all mixed, but flashes of positive in there as well. And obviously we had a little bit of a pump on the Euro yesterday, and then it just completely collapsed back down again. So, you know, we are struggling to find buyers on the Euro, especially against the Canadian dollar. So this is a very hard long. It does look like it's bottoming out. We've got tails now over the last 8 hours down here, so the price action is looking good. So yeah, it's looking like it's a nice long. I just don't know where you're going to get to. You could just get to that order block and drop. You could get up to there. Don't know. Could pull all the way back to the 24. We've been there a couple of times. I just don't know. But the way the oil is going at the moment, that should power up the CAD. So I wouldn't hold up much hope for getting much off of it. So not interested in that one. Euro US dollar, same story. We've had the reversal alert. So we had that little bit of strength on the euro, and then we had the US dollar news, which was negative. So we got that pump, but it's just flagging at the moment. So it might go, it might not, but we're massively extended on the 4 hour. So again, you know, I do not want to be longing this. I want to be shorting it. So I'm not interested down here. I'm interested when we get up to the highs. So everything else has played out. We had things like the pound. What do we have? The pound US, was it? Yeah. So we had the pound US massively extended yesterday. We got a very similar move on the euro US and the pound US. So we got that move started. Again, yes, if you took it, fantastic, you got it. But I'm interested in getting in short there and just continuing to ride what we are expecting to continue, which is weakness on the pound and the euro. So it's nothing on the ADR dashes. On the RSI dashes at the moment. I'll quickly look at time of the idea of banking, a bit of DAX. And it's just pulling back. Just missed it. So there's a couple of areas of support coming up. So somewhere around ADR, if we get an ADR hit to the downside today, I think we'll probably find some buyers coming through. I'm worried about a pullback on this at the minute, which is why I'm thinking I might want to take some profit on it. And what I'm going to do, I'm just going to break even this just in case. I don't want to go into drawdown on the DAX if it's going to pump. So I'm just going to cover that with a break even, but I'm hoping we're going to get down into this zone today, around about ADR, which I'll take it off. But this low here is quite important. So that's probably where I want to be getting out, which is $250. So it's over 0.5%. So I'm going to grab it down there, and then I'll add back on again. Right, so let's have a whiz through the pairs. If there's anything specific anybody wants me to look at, then let me know. Sammy, I've just seen your post. Gold, long or short? I haven't got any coins on me. What? Come on, there's got to be a better coin flip than that. Sure, there we go. Ready? Heads long. Heads long. Gold's long. It's not actually, gold's a short. Short. Gold. At the moment. I just think gold's coming down. But that was before I got the news on the US dollar yesterday. I still kind of like it like that. Right, so let's start off with oil and then we'll go through the FX pairs quickly. I'm just going to whiz through them because I've got quite a decent exposure on at the moment. So I'm not really looking for anything to get into at the moment, but I'll just have a look and see what we've got. So oil, I've kind of covered oil to death this morning already at the beginning. But basically we're looking for this high get taken. Once we've got that high taken, next stop is here. So it's 95 to 97 a barrel is the area that we're interested in. This is potentially where we could find resistance, which will bring us back down. So this is where we've set our range at the moment. So down here. This is price discovery. So whenever we are talking about ranges and balance areas, price moves into balance where the market is happy to trade. It then goes into price discovery mode, which is what we call a breakout. And then it says, are we interested in trading up here? Yes or no? And we go no, and then we come back down into balance. And then we try price discovery, and then we try back into balance. If price discovery works, we'll go into a trend. So at the moment we're in this balance and we are going into price discovery 95 to 97 a barrel to see if the market can sustain that. If it can, we will accumulate and then hopefully push. If not, we'll come back down. So that's why I'm looking for TPs around 97 a barrel, and then we'll see what happens from there. We are obviously in a downtrend on gold and oil. But as I keep saying, we are bouncing around pre-Ukraine pricing, which is where we are expecting to find a little bit of support, because this is where we were trading before it all kicked off and oil prices were going up, and they are continuing to be forecast to go up. So but we are obviously extended and exhausted a little bit, and we're coming up into resistance. So we're kind of getting to where I think is the point. We need to be a bit careful with longs, and if we're going to continue to take longs, we need to scale in nicely and not get too aggressive on them. You know, give it some room. So if I need to take another 3 positions, they need to be nicely spaced. When we get back down to here, then we should bounce out the range again, and that will give us our exits. But we'll see what happens with oil. But they're calling 150 a barrel next year, which is, you know, 150 a barrel's up here. We haven't been up here before, but the way the current climate is, that's potentially what they're calling for. So we'll see what happens. Indices. As I said yesterday, DAX, we made a new low. We're still pushing down, so this is what I was equating to potentially is going to happen. Yeah, so we're in that downward movement. Whether or not it's got enough power to break the low again, don't know. We'll have to wait and see. It's going to take a hell of a move, but we'll probably get something along the way that sort of pauses us. So we are respecting the 72. So the market structure is absolutely spot on. All the indices, the market structure is really, really nice. So we did just about make the low there, but So we're looking high, low, lower high, lower low, lower high, lower low. Market structure is looking good. Same with all the US indices. Market structure from US indices is actually a lot cleaner. Yeah, so looking for next leg down. So we should be looking for shorts on all the indices on all pullbacks. Whether or not we're going to get these big drops continuing that we've had before, you know, so we get these like 4, 5, 6 day dumps. You can see that the dump that we're getting at the moment, these candles are nowhere near as big as we've had previously. So it seems to be happening an awful lot slower. But yeah, looking for shorts. So I'm only interested in shorting indices. But you know, after 4 or 5 days down, we would expect the market to have a little bit of a rest, hence me looking to get out of the DAX. If we could come back down into this area, which is where we're potentially going to find some buyers. And then I'll get in again as we push up. But we'll see. Don't know. We're not in control. So what the market does is what the market does. At the moment, we're putting in a spinning top at the minute. But it's early session. Yeah, it's going to be a whippy. Today, because we've got no news catalyst today, we're like I said, we're probably going to find today is a little bit of a sidewaysy non-event. So be prepared for a bit of boredom today. So that's those. Bitcoin probably came down, yeah, yesterday, not by a lot. But yeah, Bitcoin following the indices, continuing its downward spiral. So Aussie CAD, don't know, Aussie CAD is sideways. Falling asleep watching Aussie dollar Swiss. Paint drying, yeah. It's going to be like that today. I think I've got a feeling I'm just going to be sitting in drawdown all day today, just waiting. Just watching my Forex funds account on my other monitor, and it's 1.5%. Not going anywhere. I haven't got any DAX on it, unfortunately, or oil. Yes, I have. No, I've got one DAX on it. The Aussie Swiss is going nowhere. So Aussie CAD sideways. It's a difficult one to call this. The Aussie's been fairly strong. The Canadian should be strong. We are in an accumulation at the moment. I would favour the downside on it when we get extended to the upside rather than looking for longs. But the market structure on it is very nice either way. But at the moment we are kind of in the middle of nowhere. So nothing there. Aussie Swiss, like short. As I say, I've got a short on this already on the other account. The point with the idea of taking one on here as well. Oh no, I can't. I've got 2 Swisses on, so I can't take this because I'm exposed. I've got 2 Swiss franc longs on already. So, but yeah, I like this as a short, especially now that it's just done this liquidity run. So as long as we hold here, and if we get this reversal alert to the downside on the hourly, which we just got on the M15, we should be good. So if we can break these Asian lows today, I think we've got some decent downside on it. The Swissies certainly seems strong this morning. So I like that as a short. We're up towards the highs, so anywhere up here we'll be looking short. This could be it. Yeah, we just made a new lower high after making a new lower low. So, you know, the market structure is very, very rangy, but technically a lower low is a lower low and a lower high is a lower high. So this could be where we turn from. Aussie dollar yen, still no clue on the yens. They're not giving up any information at all. Sideways. I really have no clue on the yen at all. I'm keeping glued to as I'm keeping a close eye on the yen news every morning to see if there's anything coming out of the Bank of Japan that could indicate strength or weakness. We're getting nothing at the moment, so just got to wait for some news to come out of yen. We're just laughing at this. Russian Defense Minister, special military operation in Ukraine has slowed down to avoid civilian casualties. That's because you've driven all the civilians out or killed them already. 6 months you've been killing civilians and driving them out of the country. Now you're going to slow down because there's none left to kill. Doesn't really sound like a war, does it? Like a mass extermination. Anyway. So yeah, sideways. Moving averages are sideways ever so slightly up. Can't really trade it at the minute. In theory, you could take every long and every short extension. I'd be much more interested in longs than shorts, just based on what's been happening. So, but either way, it's not really in a good spot at the moment. Aussie New Zealand, I'm looking for longs. As I say, I've been longing this thing all the way through there. Stopped longing it there. Came back down. I started longing it again. Stopped longing it there. Every time I stop longing it, it comes out and goes up to the target. So I'll wait for it to come back down here and I'll just long it again. I'm not looking to short it. Aussie US, very difficult again to call based on what happened yesterday with the US. So the US weakened yesterday off the news quite considerably. Watching Euro US dollar at the moment to see what happens with the US dollar. This is basically the inverse of the Dixie, the US dollar index. So at the moment, we've got some strength in the US dollar, more than the euro, obviously. But I want to see what happens with this US dollar spike yesterday. So if this pulls back and pushes, that would indicate that we're going to get continued weakness on the US dollar. We haven't got news for a couple of weeks. September the 15th, I think it's the next, isn't it? That's the next pound rate. When's the next FOMC? FOMC's miles away, isn't it? Yeah. Not till September the 21st. So the next rate announcement's not till September the 21st for the US. So the fundamentals on the US are pointing at, I was kind of like that on the US. I'm now even more kind of like, I really don't know. It's becoming very similar to the yen from a perspective point of view, as long or short. I can't really make my mind up on the US dollar at the moment. I have to say it's got to be stronger than the euro. So therefore, I would be looking for shorts. And it's got to be stronger than the pound. As far as the Aussie is concerned and the others, I don't know. So I'm kind of wanting to long it a little bit now, but I really can't make my mind up. So I think what we'll find is, because the US dollar is so weak at the moment, any kind of news on the other currency is going to push the US dollar around. Is what I suspect is going to happen over the next few months. Well, at least until we get the next FOMC, which is a month away. So I think basically it's a case of any extensions you get, likely you will take them and they'll be able to work out for you. Or they will go into drawdown a little bit until we get some news come in that reverses them. So really, I think any directional bias on the US dollar at the moment, unless it's against something which we know is massively, massively weak, like the euro and the pound. So, but at the moment, we're in the middle of nowhere, so there's not really any opportunities on it. CAD Swiss is a long against a long. So they're both strong currencies. Swissy at the moment is powering up, so we're going to get that move down. This, until we got the rate announcement on the Swiss franc, the Canadian dollar was well in charge because the euro was moving with the Swissy and the euro was tanking. But then the Swissy went, no, actually, we're going to come out of alignment and we're going to increase our interest rates by much more than the euro. and completely unexpectedly. And since then, the euro, the Swissy has been very, very strong. So this is a difficult currency to play because we've got two strong currencies, which tends to give you a balance and a range. So again, one of these where you could probably take it in both directions. But one is going to be driven by oil, one is driven by banking. So it's very hard because you're going to be dependent on what happens with the underlying drivers for those currencies. So if oil suddenly pumps massively and Canada does a deal to export liquid natural gas to Europe, Canadian dollar is going to pump, isn't it? So I think probably you'll get a little bit more strength coming out of the CAD than you will out of the Swissy, and the Swissy is very intermittent. So it's kind of a long, but it's a very hard one because it's not really going anywhere. So, you know, anything that's going sideways, if you've got a moving average which is flat or flattening at the moment, if you look at the end of this moving average, we're flat. We're flat. Yeah, so there's no directional bias whatsoever on it. You know, here, moving averages, we're both pointing upwards. That's a definite uptrend. This is a definite no idea. So, and that's a good point actually for those that don't know. People pay attention to bounce with moving averages. The 90% of people, if you ask them to look at a moving average and ask them what the trend direction is, they will identify that as an obvious trend. But the thing you need to pay attention to with moving averages is the angle. Yeah, the angle is only identified by the end of the moving average, right? If the moving average angle is flat, we're range bound, or we are moving into a period of sideways. What it's done in the past has got nothing to do with anything, is it? It's just an indication of what's happened. What's happening right now is these are sideways. Just thought I'd mention it because most people don't know that that's the bit you pay attention to. But anyway, Fed Swiss sideways. Fed yen sideways at the moment. Same with all the yens. Really no clue. So they will be pushed around until Kuroda comes out and says something. They will be pushed around by the other currency. If the Canadian dollar powers up, this will go up. If the Canadian dollar weakens, this will go down. So it's very, very neutral, which is my feeling on the US dollar at the moment. We're getting a lot of sideways movement, as we have had since we peaked here. So since we peaked there, we literally have gone into a range. We've been in a range since June. So again, any extensions to the upside or the downside you can potentially take. I would be more inclined for longs than shorts on anything against the yen, just because any strength in the currency is going to be able to push it. Whereas the yen, we've got to wait for them to power that up, and that is a long way away. Sammy, Ukraine can sue Russia for war crimes if X amount of civilians die. Yeah. How do you sue a country? What if they don't pay up? That just creates a war, doesn't it? War's just nasty. Swiss yen sideways. Again, Swissy, I'd be much more inclined to long this. I longed it here, 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 and here, and got out there. I'd be more inclined to long it than short it, just based on obviously current trend direction. You know, this is what I mean about these moving averages. Look at the angle of the moving averages. There, we're still in an uptrend on this. So waiting. This isn't getting far away actually at the moment. The Swiss yen. I'm not sure if it's going to hold off the 24 or not. It's not extended. I'm, you know, at the moment we're summer trading month, so I'm waiting for opportunities that are good. I'm not going to get in just because I like the look of it here, and a bounce off the 24 is likely. You know, 24 holds a lot, and then if it doesn't, the 72 does, which is why I use them. But I want this down here. I want this extended. It's not. So I like this as a long. If you're interested in getting into a yen long, this is the one. And right now, you can't wait. You're just about to get a reverse alert. You've had it on M5. M15, you've also had one as well. So you need to get in now if you want to get in on this one. I do like it as a long. For me though, I want it a little bit more extended. And if it does get extended, that's fine. So if you get in here and it doesn't work, obviously you're going to target the highs. If it doesn't work, it's coming back down. You could need to wait until you get a 24 bounce. So I suspect more likely that will hold up this area here. So by the time this propulsion gap, this is a lovely propulsion gap on H4, look, accumulation, propulsion. So this propulsion gap. By the time price trades down to here, moving average will be coming up underneath it to catch it and propel it. So if you get into it here, you've got potentially 220 pip move, which is 2 ADR. If you're getting in half an ADR apart, you could have potential for 4 positions before push. So equally though, it could just go straight from here. I may have asked this before, but you're saying FJ long, but you have it short in the EA on my Forex funds. Yeah, at the moment, because it was extended when I got in. So we're up at the highs. Don't forget the my Forex funds account. I'm just trading this basically because I need stuff to trade, and I'm just looking for, the way this is set up is RSI has to be extended on the hourly, yeah, and it's taking M5 entries. So I'm literally not worried about trend direction with this one as much. The yen, I really don't have a directional bias on the yen. And you know, I think you can take it both ways. I haven't got time. I've got 30 days to pass this. I haven't got time to wait for Japan to wake up and tell me which way to go. I need some yen exposure. I need exposure on everything because I need to find enough opportunities to get in and out within 30 days to get this banked. So that's the only reason I'm short on it. With my own money, I'm not taking it, but this isn't my money. I paid $300 for the shot at a 50k account. I'm not overly bothered. I am, but I'm, you know what I mean. But you know, this is what I'm saying. I like it long, but equally, I can very much see why we would do this as well. You know, if you took that trade, it worked. If you took that trade, it worked. If you took that trade, it worked. If you took that trade, you had to wait for a bit of a scaling. If you took this trade here, I did take this trade. Remember, I took that. We took this trade. I took this one because I liked it long. Yeah, it worked. You can trade it in either direction at the moment because of the neutrality of the yen. So, you know, when I was scanning through pairs, I was literally, the day that I launched the EA onto the account, I was scanning through pairs and I was like, right, what can we get into? And I went through and I saw the Swiss yen and I saw RSI extended at the highs. So I shorted it. That was the reason for the trade. 4-hour RSI extensions to the high. But overall bias obviously is long on it, you know. But I'm looking at, you know, if you think about how long this could possibly take to play out from here to here, it's a week or two, isn't it? I've only got 4 weeks to trade the account. So it's either going to work or it's not. And this is what I mean about these prop firm accounts. If you're going to position trade them, you need to get in and take the trades. If, you know, it will either work or it won't. If you go into a squeeze on the US dollar Swiss for 4 weeks, you're not going to make it. You're going to blow it. I won't blow my own account because I'll manage it and I can sit there for a month and 6 weeks or 8 weeks in drawdown, milking something and managing something, but you can't do it with this because you've got your time limited until you pass, obviously, and then you can do what you like. Build up your bank, you know, and this is what I'm going to be planning to do with this account is position trading it in the same way, but I will have to take losses faster. So yeah, Sammy's doing an account at the moment where he hasn't got any time limits on it, and that's the same as CTI. There's no time limits on it, but you are still constrained by drawdown, and this is the problem. And I was having this conversation with Sammy the other day. He's got an account which has got I think it's a 4K account, isn't it? That one with something like $300 a drawdown or something on it. So really, you've got a $300 account. This account here is not a 50K account. Yes, there's 50K in there, but my maximum drawdown is 5% in a day, 5K. So I'm actually trading a 5K account. Think about it. So if I go to $5,100 in drawdown, I've blown it. So I've actually only got a 5K account. I'm trading a 5K account, and I'm massively over leveraged on it. That's the only way I'm going to pass it. Yeah. So when they say, oh, you can have a 100K account, you haven't got a 100K account. You've got a 10K account because you've got 10% drawdown limit. Yes, it's all smoke and mirrors, the prop firms. You've got to know how to play them. That's the thing. You just need to know and accept that you are going to get them, you're going to pass them, you're going to get some money, and then you're going to withdraw some money and you're going to blow them. And then you need to rinse and repeat. And that's the way you do it. And that's what you do. You use them to extract money, which is the problem I'm having with Apex at the moment, because Apex, it takes 3 months to get a withdrawal. So what I'm finding with my Apex accounts is I have to trade them up to a level and then sit on them. And I take the odd trade every day, every other day, or a couple of times a week to keep the account active, so I can get to that withdrawal limit. Because if I keep trading on a daily basis, at some point I'm going to hit that trading drawdown. But if I can trade it up to 4 to 5K or 10K, I sit there and I don't trade it and I wait for payday. And that's why I've got multiple accounts with Apex, because one's sitting there as it is at the moment, my 100K account is sitting there with profit in it. I'm going to keep that profit and I'm trading the other one. But it's the nature of prop firms. Their business model is to find successful traders. 1% will make it past 3 months. The rest of them, their business model is to get X amount of money out of challenges. And that X amount of money they get out of challenges more than pays for the payments. And the 1% are the ones that actually get it, and they go. And I've been the 1%. But I'm not, I'm the 1% for 3 months, and then 5 months later when I blow the account, I'm not 99%, aren't I? And then I go back to square one. It's just the way they work. They're a pain in the backside. But if you want to trade any size and you want to make money in this industry, it's a necessity. You've got to have capital, and this is the bit I say in the course. Reality check. If you haven't got 20, 30, or 40K in the bank of personal money, you cannot be a trader because you haven't got the capital to trade. You can start off with a couple of £1,000, but you're going to make 200 quid a month. Can you survive on 200 quid a month? Can you pay your mortgage on 200 quid a month? No, you can't be a trader. I personally need a minimum of 5K to run my house a month. Yeah, so I need to make 8 to 10K a month out of multiple accounts. That's what I need to do. That's reality. I've got to make 120K a year. So to make 120K a year, I can't do that on a $2,000 account, can I? Got to have capital. And that's where the prop firms come in. But you need to be playing multiple ones of those, because you're going to blow them. Remember when we did that Apex thing where we had the Apex 80% discount? I bought, what did I buy? 6, 7, 8 accounts. I passed 3 of them. Yeah, I blew the others. But I passed 3 of them, and I've got 3 of them now. So I need to milk those 3 for 20K. And then withdraw that until I lose them, and then back to the beginning. What's my account sizes? Well, they vary. I've got a 50K, 100K, 100K in my Forex funds. I've got my own 40K. But the difference is, like with my account, I can do what I like with this because it's my money. I've got no constraints, no restrictions. If I want to get in with 10 contracts short, 10 lots short, I'll do it. I won't, because that's ridiculous, but I will take higher risks with my own money, and they pay out. they work. With this, I can't take higher risk because it's not my money. They won't let me take more risk with it. So you've got to trade it more conservatively, or trade it aggressively and have a lucky period. And this is, again, what somebody said in the Telegram group the other day. There's a lot of people out there teaching you how to trade, but they don't trade. Yeah, you won't see them doing what I do. You won't see this happening in real time, live every day. You'll see a lot of videos posted about this is how you do it. And that's fine. And the person in the Telegram group said, but they don't teach you how to deal with a loss of 6 to 8 losing trades in a row. And my reply to that was, you take 6 to 8 losing trades in a row. That's trading. Why do you think you won't get that? Why do you think if you take 100 trades, yeah, and you've got a 50% strike rate, why do you think it's going to go winner, loser, winner, loser, winner, loser? No, it doesn't. It goes winner, winner, loser, loser, winner, winner, loser, 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 winner, winner, loser, 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 winner, winner, winner. Yeah? You take 4, 6, 8 losing trades on the trot. That is just part of doing business as a trader. Yeah? You're going to take a load of trades. Do you think I took all of these thinking they were all going to go into drawdown? Of course I didn't. No idea. I had no idea I was going to go into 7 positions on that. 6 positions. If I did, I wouldn't have taken them, would I? It's just what happens in trading. You take trades and the trades go against you. You can't deal, there's no system or strategy out there with a 50% strike rate or a 60% strike rate that has a 1 win, 1 loss, 1 win, 1 loss. On the website, there's that spreadsheet, the risk reward calculator spreadsheet. There's a video on there that explains how to use it, and on there you can see it here. You can put in win, win, loss, win, loss, win, loss, win, loss, win, loss, win, loss, win, loss. So you're going with something with a 57% strike rate, but put 10 losses in a row. Yeah, your strategy will go like that, but it will still be positive. It's the end result. If you've got a 50% strike rate and you've back tested it to death over multiple time periods, over multiple instruments with the same risk reward ratio, and you get a 50% strike rate, that is a profitable system as long as the risk reward is more than 1 to 1. But what people can't handle and why people system hop is because as soon as they've done this back testing, they spent 6 months developing this edge in the market. They take the first 5 trades and it goes loss, 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 loss. And they go, oh, waste of time. On to the next. System hopping. But what they didn't do was take the next 10 trades, which were all winners. If you get 6 to 8 losing trades in a row, you will also get 6 to 8 winning trades in a row. No one ever tells you how to manage those, do they? What do you do when you get 6 to 8 in a row? And this is where a lot of people fall down. They're worried about 6 to 8 in a loss. How do I deal with 6 to 8 losing trades in a row? What you should be worried about is how do I deal with 6 to 8 winning trades in a row? Because when you've got 6 to 8 winning trades in a row, what are you going to do? Double your lot size, because this system is the holy grail. What happens when you double your lot size? You get 6 to 8 losing trades in a row and you blow your account. And you go back to square one. It's psychology. It's all psychology. So I keep going on about it, but this is I don't have a problem with prop firms, but I think people just need to be educated on how to use them. Yeah, I have blown more than 20 prop firm accounts in my X number of years. I don't know how many years I've been trading prop. 3, 4 years? 3 years probably. I've blown loads of them. But it's not the ones I blow I worry about. It's the ones I win. And I use those to pay for the ones that I've blown. If I spend $2,000 on prop challenges, say they're $199 each, and I take 10 of them, yeah? If I take 10 of those challenges and I come out of it with 2, I've spent $2,000. Out of those 2, all I've got to make is $2,000, and I'm making money. That's how you use prop firms. Everybody sits there wanting to trade them for, get them and then trade them and use them as your bankroll. You can't, because you're going to blow them, because these things here cannot be controlled by you. They're controlled by the market. If you're using a stop loss or you're not using a stop loss, it's totally irrelevant. At some point, you will have a streak of 10 losing trades at 1% risk, you will take 10% loss and blow that account. You can't control that, because the best system in the world is going to have a losing run. So what you've got to do is play the odds. Take 10, keep 2, and hope those 2 have a next winning run and they don't have a losing run. Hopefully they'll last 2 months and you can extract 5 to 10k. Yeah, take off the 2, I've made 8. But I took 10 challenges to get there. I know people on Apex who are on account 40, 50, 60. Yeah, and each of those accounts costs between $100 and $200, but they're still making 6 figures a year because they're just taking the winners. They're taking the winners, they're getting them to a point where they can get paid on them, they're keeping them there, and they're trading in other accounts so they don't blow it. That's what you got to do. And that's what I'm doing here. If it blows, it blows. I've lost $300. If I take 4 of these, job done. If I pass one and I make 10 grand out of that one, I'm winning, aren't I? That's it. That's what it's all about. That's what you do if you haven't got your own funds. But you know, if you've got your own funds, you don't need to do that. Anyway, lesson over. Let's go back to analysis. I'm going off on lots of tangents today, aren't I? So yeah, Swiss yen. So that's why I'm short Swiss yen on that account, which was why that waffle started. Euro odd, short. Obviously, it's a short. Looking for short opportunities. That was the short opportunity. Looking for pullback and short. Euro CAD, and again with all of these, they are extended to the downside. All these euros are extended to the downside. If you want to take them, but be aware that is a fairly big pullback at the moment. There's a likelihood you're going to get this and this and that if you get it, and that. Yeah, so you might get that and then it does that. So if you're targeting there, I've no idea. So I'd just be safe. Euro is a short. Euro economy is a short. Canadian dollar is a long. No, I'm not interested. Euro Swiss, same thing. Swissie's powering up. Whenever the Swissie powers up, it beats everything. The Swissie, when it powers up, is going to beat the euro hands down. So I've just seen your question, Sean. I'll answer that in a sec. Halfway there to 10 Forex machinist, yeah. But if you, that's what I mean. If you do 10 prop firm valuations, right, and the first one you pass, you will blow it. You will. Just be prepared for it. When you blow it, see how far you get, and then the penny will drop, and you'll go, right, I see. If you get that prop firm account and you go 10 contracts long on the DAX, the day that the DAX goes 200% ADR, take the profit, don't touch it. You'll have to trade it for 10 days, so you enter 0.01s, 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 but take that money. You've made it. You've got a prop firm, it's funded. If you can get more profit in that prop firm account than you had losses in it, you've done your job. Go and get another evaluation while you're waiting to get paid out on that. That's how you work it. Euro pound. Euro pound is a short. Hence we're getting accumulation and balance. I really don't know which way to trade this. So you could get in either way. Again, it's one of those where you could probably get in either way. I'd be much more inclined to short it than long it because the euro is weaker than the pound, but the pound is still weak. So I'd be more inclined for shorts, mainly because shorts work faster than longs. You know, that's bear flags work faster. Just naturally they do. They always have done. So yeah, anything to the upside really is shortable, but again, you're tying your money up in something that is now lower than 50 ADR. It's a really slow pair. You're better off tying up your euro and your pound exposure in something against Aussie, US, potentially yen, New Zealand, anything else, Swissy, CAD. Just don't tie it up against itself because it's just an awful ADR pair. Euro yen, again, sideways. this is the only euro I would consider taking a long on, and I really still don't want to do it. So again, you could take any extension on this. There's better yen pairs to trade, so I've just got no interest in it at the minute. Euro New Zealand is a short. You can see I've got a couple of shorts taken on that one recently. I've got one in there at the moment. All the time the euro's coming down, fine. Aussie and New Zealand are kind of strongish. Not massively, but strongish. So therefore we should be looking for shorts all the time on this one. I got in this one, I think I got in this one on the hourly, wasn't it? Yeah. So, whoops. Got in on the hourly extension on this big push, which was an ADR extension. So this was an ADR reversal coming into an area of balance where I was expecting to find sellers, and that's exactly what we got. Scaled into a second position and out. Still like it short. You know, we're playing the 24.72 bounces to the downside. Market structure is short. Euro US dollar short at the moment. So question mark on the US dollar, as I said. Now I want to see what happens with this today. Well, not today, this week really. If we can get some push back up towards the 24, I'm going to start looking for shorts. But I want to see, we're either going to get an accumulation drop from here, or we're going to get peak formation low going and start some low market structure grind. Got to get through that lot. All the sellers in there that started this move, got to get through all of them who will be protecting their positions. It's going to be very, very hard work. For the US dollar to weaken enough for the euro to take advantage. So wait for it to get up there and then short it. Just to answer Sean's question quickly, what's your opinion on trailing stop versus break even? I don't like break even stops. I never use break even stops unless it's something like this where I've got a single position and there's no risk. It's moved a long way. I'm still expecting the move to work, but there's no point in taking a drawdown on it. What most people tend to do, and again, think about market structure. Market structure and support and resistance goes like that, yeah? Okay, so you got support, resistance areas. That's market structure. That's how the market moves in waves, right? When you get into a short position, typically it's on a breakout or some kind of reversal that forms a strong move to a breakout. If you enter that position and put your break-even stop, what are we expecting price to do after it's pushed? Pullback, right? So you have a down move and then you have a profit take move. After that down move, the profit take comes. If you put your stop to break-even, you're just giving the pullback your break-even before the next leg starts, which is where you make your money. If you're right on that trade, it's not going to go like the US dollar CAD did yesterday, the US dollar Swiss, right? Went like that and then like that. That happens on fundamental news. What happens 90% of the time is that, right? You are just going to give every piece of profit back on every pullback, every profit take move if you enter break even. So price moves down, yeah, everybody enters short on the break, pushes down to here, they don't take their profit, they move to break even, it comes back, takes out that break even, moves down. You enter short on the break, moves down, rinse and repeat. Yeah, break even stops, waste of time. Either, which is what I do, take your profit off, yeah, and then add the position back on again. Or just leave it and then wait for the pullback and then the next leg down and then take your profit off. So one of two things is going to happen when you enter a trade. It's either going to move far enough for you to go, I like the look, I'm happy with 0.25%, I'm happy with 0.5%, I'll take it. Or it's going to move 0.25%, not far enough for you to take it, otherwise you would have taken your profit, wouldn't you? And then it's going to pull back and then it's going to do that. Yeah, so either take it and add it back on and then take it again and add it back on and then take it again. If it goes into a range, keep adding it back on and taking it off and adding it on, taking it off. That's what I keep saying. Your job as a trader is to take money from here and put it in here. Yeah. If something goes into a range like oil has been, I've been buying oil, getting out, buying oil, getting out, buying oil, getting out, buying oil, getting. If this thing does this for the next year, I'll pay off my mortgage. Yeah. But I'm not going to go get in, break even, stop, get out for nothing, get in, break even, stop, get out for nothing. Yeah. And as I said yesterday in the Telegram group, trailing stops. If you look at my P&L, this US dollar Swiss here, this US dollar Swiss here, these are trailing stops. So these ones here. The reason they're trailing stops is because price has moved a long way. It's at a level where I'm happy to now take some profit on it. So rather than taking the profit, I put a trailing stop on it. One of two things is going to happen. This fundamental is going to make this thing collapse further, in which case my trailing stop is going to make me more money, or I'm going to get out where I'm happy. So trailing stops, yes, I like them, but I don't use trailing stops on positions when they get into profit. A trailing stop I will use when I'm at a level that I've got a decent profit on. So let's say, for example, if this gets to something like 0.4, right? I'm happy to take this off at 0.5, put 0.5% in the bank. If it gets to 0.4 and it looks bearish, I'll put a trailer on it. And if it takes me out on my trading stop, I might take 0.32 instead of 0.4. So I lose 0.8%. But what I'm giving myself the option is for the DAX to do that today. And this 0.4 turn into 0.75 with a trailing stop. The trailing stops, yes, I like them, but I add them to positions when they're in a decent profit. So yesterday, the US dollar Swiss, look at it on the 5-minute chart. Yeah. This thing up here started to tank. This point here, I put a trailing stop on that. I did not close it. I put a trailer on it, and you can see my trailer, I think, was 10 pips. Yeah, 10. There you go. So I put a 10 pip trailer on it because it was either going to pull back and fill this gap, in which case I wanted to be out, or it was just going to collapse. Unfortunately, it just took me out before it collapsed. These ones that I had, as soon as that got into profit, I started trailing it somewhere down here, and it pushed down to there. And then, as you can see, it pulled back, got me out. So it's just a case of trailing stops are very good for positions that are very much in profit. What I don't do is, as soon as something gets into profit, let's say I got in short there, I don't stick a trailer on it there. I wait for it to get down to here somewhere, and then I put a tight trailer. So I look at price action. Yeah, so let's say it was here and I was thinking, right, it looks like we're starting to reverse here. I'll put a trailer above the reversal alert. So I put a 7 pip trailer on that right now. It's either going to accumulate and drop, in which case my 7 pip trailer will come with me, or it's going to reverse, come up into this propulsion gap and resistance, in which case I'll get out the trade. I'll add it back on there, but I'll give my trades an opportunity to run and make money. Let your winners run. Yeah, everybody's heard it. Let your winners run. That's what you do with trailer, but use trailers to do it. Diamond, I was wondering if break-even stops on the My Forex Factory EA would help keep drawdown from going too high. Yes, they would, but equally it would make it hard to make money because you'd get stopped out too much on the positions which push. There's no right or wrong. Trading stops and break-even stops is an age-old argument. And when you've done as much testing in the I build EAs. I built 2 EAs this week. I use EAs to do backtesting and strategy development. So I'm building EAs all the time. I've got another EA I'm going to build for hedging today. Well, not today, maybe tomorrow or Friday. Just to backtest, so I can fully backtest 10 years worth of this strategy and see what the edge is. And what backtesting for me does is it shows me where the holes are. So I will do, I've got a spreadsheet here. Let me just open the spreadsheet. This will give you an idea of what I do. So this is one of my spreadsheets I'm working on at the moment. This is a strategy, an EA that I've built. And basically I put it through the strategy tester in optimization mode with multiple options. Yeah, so it backtests, this backtests 3,000 different variations of an EA across multiple pairs, right? What I'm looking for here is I'm not looking to find the best return or the best drawdown. What I'm looking for is what is causing the most pain in this strategy at the moment. Yeah, so I can see instantly the stop loss set at 250 is where we generate the lowest drawdown and the best return, and that is a constant across all of these. 250 is where I want to be. 250 is where I want to be. 250, 250. So I can now say conservatively here, 250 as the stop loss on this particular strategy is what I will use. So I will now retest everything with 250 as a stop loss. How many trades should I be taking with this strategy? 1s and 3s. 1s, 2s and 3s. 2s, 3s and 1s. Yeah, this is testing up to 6s. So I can see on the vast majority of pairs, if we take, you get the odd anomaly and outlier, this is the yen. If we take 1, 2 or 3 positions, that is the best thing to do. So I now know that with this strategy, stop loss of 250 and taking no more than 3 trades at a time is good. I'm testing on this one trailing stops. So where should my initial trailing stop start? And how should I use, I'm using what's called a tight stop on this. So when we get to 100 pip trailer, it then tightens it to 30, which would mean we've moved well in our direction. We're expecting a pullback, so tighten the stop up, which is like me adding a tightening stop. So what I'm looking for is what of these is not good to use, and it will tell me that tight stops are not good to use on strategy. So this is what I spend most of my time when I'm not trading doing, is strategy analysis. And over the years, I've built hundreds of EAs. I've tested trading stops and break-even stops to death on every strategy to try and see if they make a positive or a negative impact on any strategy. I have never found a strategy that a break-even stop improves. It always makes the profit curve worse, because what you're doing with a break-even stop is you're telling the market to come back and take you out before it moves in your direction. That's never, ever, ever a good thing to do. A trailing stop will always, if you add it straight away, decrease the profitability of a strategy. Adding a trailing stop on after it's moved X amount in your direction always improves the strategy. Yeah. So to answer the question, break evens, no. Trailing stops, yes. But do not add the trailing stop until you are in profit and close to where you're happy. Then add it. So I will add trailing stops in, so this pound New Zealand, for example, I'm short on it. This position here. When this gets down to here, I will probably add a trailer onto it. Why? Because we're reaching a balance. And there's a good probability we'll get a bounce. Yeah. So I'll add the trailing stop when we get down to this section, because this is where I'm expecting it to bounce from. If it just accumulates and pumps through it, fine. But I will add them when I think, right, we're probably going to hit some hurdles here. Now's probably the time to get out. I'm not going to get out necessarily. I might do, depending on what my situation is, what my P&L is. There's all sorts of stuff that goes into my decision-making processes, whether I get in or out or put a trailer on. But put a trailer on it. Like I said to Sammy yesterday with his trades, if in doubt, stick a trailer on it. What's the worst thing that can happen? You'll lose 5 or 10 pips, but you'll still make money. What's the best thing that can happen? That thing tanks 30 pips and you make an extra 20 pips on top of what you would have taken. But break evens, as I say, all my strategy testing over many, many years, and talking decade of strategy testing and analysis like you just seen in that spreadsheet, which is what I do all day, never found a break even to work. Just doesn't work. I put it in the EA because everybody wants it. So the market reversal alerts EA, and I think I've got it in the price action toolkit. I put them in there because everybody wants it. Because most people haven't spent years doing strategy analysis and backtesting like I have. But that's why I put it in there. Go and do it yourself. Go and use the market reversal alerts EA. Use the break-even stop in there, and prove it to yourself. Yeah, run one of my set files, H4M15 or whatever. Yeah, run it for 3 months or 6 months or something on M5 or whatever, and then come back and put a break-even stop on it. See what impact it has. If the impact is positive, tell me about it and prove me wrong. If it's negative, you don't want to do it. And that's what strategy development is. Strategy development is all about testing something until you get a positive profit curve. Yeah. And the next part of strategy development is applying different conditions to that profit curve to see whether or not the profit curve increases or decreases. If something decreases the profit curve, remove it. If something increases the profit curve, optimize it. And then you'll get a perfectly beautiful strategy that works. Then take that strategy and apply it to a different time frame. So say this is 1 year. Take this exact profit curve you've created and then apply it to the year before. If that profit curve remains the same or at least breaks even, you've got a profitable strategy. Now take that 2-year period and apply it to a different currency. Does it still work on that currency the same as it did on that? Yes, you've got a profitable strategy. If no, that strategy is not working. That's strategy development. That's how you do it. You test and get a profitable strategy over a period of time. You retest it on a different time period to make sure it works on that time period and different market conditions. You retest it on a different instrument to see if that set of conditions applies across all markets. If you get tick on all of those, you've got a strategy. That's how I develop position trading. But it takes years. Anyway, so there you go. There's your answer to there's my answer to break even and trading stops. You'll find a load of people give you different answers. That's just what I found. So they've all got their uses. As I say, I'm sitting here right now, I'm saying all this to you, and what have I got in place? A break even stop on the DAX. But why have I got a break even stop on the DAX? Because I've got 22% in the bank and very little drawdown. And the last thing I want to do is for the DAX to pump and me to go into a massive drawdown. I'd rather go flat on the DAX and wait a couple of days than sit and manage a couple of days drawdown. Protecting. If this was sitting at 1.5%, I would not have that break even on there. I want this position to work. At the moment, I couldn't care less what that does. I've done 4 months profit in the last 2 months. So I'm trading completely differently to what I would normally do. But hopefully that answers the question. I was wondering if break-even stops would help keep DD from getting to if it hits, in theory, the EA will get you back in when price starts moving again. Yes, so yes, I mean that's kind of what. Yes, it would work that way. The EA would get you back in. Again, it's something I haven't spent enough time back testing to reduce drawdown. What I should do is do some back testing in the market reversal alerts EA with the sole focus of getting drawdown reduced. The amount of time that would take to do that, I wouldn't have enough confidence in it moving forward to actually worry about doing that back testing, because I know that no matter how good my back testing is and how good the results I get in the past are, if Ukraine war hits, none of that, it all goes out the window. If we go into recession and the housing price bubble collapses, or war kicks off with China and someone, it doesn't matter what you've done. So I can't really be bothered, is the honest answer. It would probably help. So I would say if you're going to do that, probably half an ADR. Once we've moved half an ADR roughly in pips, so you'd have to calculate it roughly in pips. Once it's moved roughly half an ADR, then stick a break-even stop on it. And what you'll get is the ones that go like that, you'll get stopped out on, you'll get in again, as you say. The ones that go like that will work. The ones that go like that, the problem you'll have is if you use a break-even EA, a break-even stop, is these positions here, if you get stopped out on those positions there and you don't get another reversal alert, price will move down and you won't have those positions on, so your average will be a lot lower than it would be. So there's downsides to it as well. If you're going to draw down on multiple positions and you have break-even stops, those top positions aren't going to help bring your average up. So I'm not sure how that would work. Again, it's something you can try. Sammy, just noticed your oil chart is different to mine. Don't know. Shouldn't be. Just broken out on oil, which is lovely. So again, here, they're not in enough profit for me to warrant putting a trade on at the minute. So leaving. Sean, you're telling very hard truths. It's difficult for me to hear you dish out some uncomfortable wisdom. Since I'm trying very hard not to hop away from this system. I'd rather tell it like it is. I annoy people by telling it like it is, I think. But I've been doing this for 13 years, nearly 14 years. I've been through everything that everybody's been through. And you come out at the end of it with the conclusion that you are not in control. There's nothing you can do about it. If you haven't got cash, you can't make money. That is the real hard truth of it. Think about if you want to become a doctor, it's going to cost you 100k to become a doctor. In medical exams, the 5 years you're going to spend becoming a doctor, all the accommodation, you're going to build up a debt of 100k. Why do you think you should become a trader without a 100k account behind you? If you want to become an airline pilot, I think it's 165k or 170k to become an airline pilot. If you want to become a professional trader and make the same money as they do, which is about 110, 150 grand a year, why do you think you should do it without 100k under your belt? You know, this is a job that everybody aspires to want to do, yet nobody wants to do it with anything more than $200 account, or a $500 or $1,000 account, or a $5,000 account. Yeah, people start with a $5,000 account. How many? I've blown 3 or 4 of those over the years, many. But I thought I could become a millionaire with £5,000. Why? I have no idea why I thought. Oh, I know what I thought at the time, because people were showing me Lamborghinis and jets. But they didn't. They're not making money trading. They're not trading, are they? They're selling a course. It's a different thing. I could probably, you know what? If I really pushed my indicators like hard, I probably could make more money out of selling indicators than I could out of trading. Is the real truth of it. But I don't do that. That's why I price everything as I price it, because it takes a lot of my time to run. I'm getting paid in indicators for the time I spend doing what I'm doing, but it doesn't pay me enough to live on. If I set up a business to do nothing but that and sell education, I probably could. But again, if you've only done as many courses as I've done, you'll find out that all the education out there is telling you to do exactly the same thing in a different way. And at the end of it, none of it works. Because every system has got a fail point, and every fail point will mean you'll system hop. And all they end up doing is buying more systems. When you decide you can't control where the market's going, and you end up hitting that button and eventually seeing the market turn around and going your way at some point in the future, that's when you suddenly go, all right, well, let's just hit the button. And then you fine tune that. And that's what I've done, is fine tuned my way of pressing the button. There's a method to the madness. It's very hard to show, isn't it? In the case, the purpose of the break even isn't to increase profitability, to reduce drawdown. Yeah. So that drawdown, yeah, we're talking about the drawdown. Yeah, break even stops will reduce drawdown. The problem will be when, let's see my long here. This is a really good example actually of where it would fail. Let's say that's my entry, my break even line. If this comes down and hits the support rectangle and takes me out at break even and then bounces from here and goes there, I'm not going to get another reversal alert to get in long, am I? So what I'm doing is literally just losing that position and not getting back in. If it comes down to here and does that, it takes me out, stops that drawdown, gets me in again on the next reversal alert. That is where it works beautifully. But if it comes down and hits a support rectangle, hits this accumulation and bounces, I just lose my ability to make money, which is why I think they don't work. But yes, they would stop drawdown. But if it doesn't go into drawdown, it also stops me making money. That's the thing. It's a very, very, very hard thing. Like everything, I keep saying it, do it. Experience it for yourself. And eventually you'll figure it out. It's a long journey. Normally don't care too much about drawdown, but the prop firms, it's the equation. Prop firms is the only thing you've got to worry about. That is the only thing you've got to worry about. Making money is the easy bit. Controlling the drawdown is the most difficult thing. Always has been. Don't hop away, Sean. You're in the Telegram group. Come and chat. Yeah, that's what it's for, the Telegram group. It's for support on the indicators and talking about what I do. There's no silly questions until they've been asked twice. Hitting the drawdown would also impact your ability to lose money. Yeah, exactly. You know how I trade. I'm fast and loose, and I deal with drawdown in a different way. I'd rather not be. You know what annoys me more than anything? Break even stops and then the market going without me. That annoys me more than going into draw. If it goes into drawdown, I can handle it. I know what to do with it. If it hits me there and then goes that way, I'm like yesterday, US dollar Swiss. Yeah, I made a killing yesterday on US dollar Swiss. Do you know what annoyed me the most yesterday about US dollar Swiss? Was me getting out of that position there. And then it doing that. And me leaving $500 on the table. That's more annoying to me than anything else. If this went into drawdown yesterday and stopped me out on that, and I'm still sitting in 1.8% drawdown on it, I can handle that because I know what to do with it. The psychology of losing money because you took it off too early, or losing money because you got break evened like this. If it had done this yesterday, took me out of break even, that would have been throwing things at the wall. That's why I don't like them. I've never found a use from a statistical point of view or a backtesting point of view where they actually make money or have a beneficial impact on a system, and psychologically they drive you up the wall. Break even stops. But we all want to do it because we all want to protect our capital, and that's exactly the right thing to do in any other strategy but position trading. If you're using a stop loss strategy, break even stops protect your capital. The number one thing you have to protect is your capital, because if you haven't got capital, you can't work. End of story. If you have a 5K account and that's all your savings you've got, you put it into a trading account and you blow that 5K, you cannot trade anymore. That's it. You've blown it. So you have to protect capital. If you're using a stop with 0.5% and 1% risk, yes, totally understand it. But position trading, we're risking tiny little lots. So, you know, if something goes into drawdown by 1 ADR, oh my God, there's $150 I've got to worry about. It's not a problem, is it? Completely different mindset. I meant to make money, yeah. Right, sorry, let me get on with analysis because it's 10 to 10. I got up to the pounds. So finish off the analysis on the pounds quickly. All pounds are shorts as far as I'm concerned from a fundamental perspective at the moment. So I'm looking for short entries. I'm looking for RSI extensions to the upside on the hourly and 4 hourly. So we had the trade earlier this week. Sorry, late last week. Pound CAD, same thing. Yeah, it's a short. Canadian dollar is strong, or it's neutral to strong. It's kind of flip-flopping about and then going a bit powerful, then flip-flopping a little bit. So, but it's more strong than not, and pound is short. So looking for short opportunities, same thing, looking for hourly RSI extensions, ADR hits to the upside, 4-hour extensions, anything push, any kind of pop, we want to short. Pullbacks to the 24, pullbacks into propulsion gaps, any reason to get short. Pound Swiss, same thing. Swiss is powering up at the moment. I'm in short on this at the minute. This is one that I took where obviously we're not extended. Didn't get extended on the hourly. I took this one yesterday because it was an ADR hit. Yeah, this hit ADR yesterday, so I got in. So I'm looking for a quick play on this one. Pound yen, the same as the euro yen. There's better yens. I kind of like it long because of the yen, but I still don't want to long the pound, so I'm just not interested. Pound New Zealand short, in a good spot last week, which has played out nicely. I couldn't get into this one because I had New Zealand dollar exposure elsewhere, and I had pound, I think I had pound US on at the time or something, but that was a nice short. That worked out very nicely. Pound US, again, right now we've done a liquidity run. The reason we're getting a lot of movement on this is obviously we've had the news, but also we've got the limit orders sitting here. So wherever you get a obvious turning point, the market makers, the institutions, the hedge funds will stick limit orders in because they know that the banks will manipulate down to price. They've taken the liquidity, they ran with it on the news, which is again why I want to see what happens here. I'm not convinced this is necessarily massively bearish for the US dollar. It could be, in which case then we'll see that. If not, we're going to see this. So I'm waiting to see with the US dollar what happens with the pound US dollar and the euro US dollar specifically, because these are the weakest currencies at the moment. So if this is weakness in the US dollar, we'll see a bit of accumulation, maybe a bit of rise. If this is manipulation on the US dollar and the US dollar is actually stronger than anticipated yesterday, we'll see this pop down. So either way, I'm not interested in longs. New Zealand CAD is short based on Canadian dollar strength. The New Zealand is quite strong at the moment as well. I think you could probably take this either way at the minute. I'd be more interested in shorts though, just based on Canadian dollar strength and obviously current trend. So this is a very, very large kind of flag move potentially playing out, which means that we will quite possibly come down and challenge these lows again. So looking for extensions to the upside on hourly or 4 hourly, looking to take shorts. New Zealand Swiss, same thing, looking for shorts. Hourly, almost got an entry yesterday. That would have been nice to get up into this area. In fact, we did. That's why we turned. So we pushed up into this accumulation resistance yesterday, and limit orders kicked in, pushed it back down again. So when I talk about limit orders kicking in, when banks and institutions enter long-term positions, they enter, manipulate price down. Once prices move down, they will put limit orders in place to defend those zones. So when you get back to them, banks are automatically activating limit orders, which is why market structure exists. Yeah. So here, when we broke this accumulation, so this is a balance break, banks will be defending this area with limit orders because they want to continue the move to the downside. When they've taken their profit and they've had enough, those limit orders won't be there anymore and we'll be able to blow through them, which is why we get sell cycles and buy cycles. It's just banks moving the money around to make the money. money makes money. New Zealand yen, sideways, not going anywhere. No idea. New Zealand US, again, difficult to tell. We need to figure out what's going on with that US dollar after the news yesterday. We've got no more. We've got GDP figures tomorrow, which will help. But equally, we could do one or the other here at the moment. Depends on what's going to happen with the US dollar. So the entry on this, you should really already be in it from Monday. Or any time really, you may well have got in down here. So this accumulation break to the upside, what we would normally see with a wick off move, if anybody's familiar with wick off, is see the wick off spring. That happened a bit too quick for me, to be honest. And then we see a break to the upside and an accumulation at the highs before a break. We've pulled all the way back into here. So to me, potentially what we're doing is just sitting in a wide range at the minute. Market is unsure as to direction, but we have broken all of this low here, and then we came and retested it and rejected it. So this could well continue in a downward move, but that's going to require some strength on the US dollar. As I say, we need to see what happens with that US dollar strength. So at the moment, this is a difficult one to trade. It looks like a fairly good long from down here. Nice W reversal, but it could easily go either way. So it's difficult. But the good thing about this, if you do enter this one, is you've got multiple support resistances potentially to help you down here. And they're only kind of an ADR away. It's 126 down to there, to 1.5 ADR. So if you get in with this as a long now and look to target, it's a couple of areas you could target really, there, potentially all the way back up. But if it pushes down again, you're going to get extended very, very quickly somewhere in this zone, which will be potentially an opportunity to get out when it gets down to there. So it's not a bad entry. Not an amazing entry, but not a bad entry. Just really depends on what's happening with the US dollar, and that's a bit of a question mark. US dollar CAD, no idea, sideways. For me, it was a kind of long against a kind of long. You can see I've got an alert here. I'm going to leave that in place. I don't think it's going to get triggered now. But if we do push up into there, I'd be interested in shorts out of there. But it's these two are trading partners. We're very, very happy. This is just one big balance at the minute. So again, short the highs, long the lows. US dollar Swiss, I'm short. Again, I don't know whether I'm right or wrong on this one. We've certainly got a nice looking reversal starting at the moment, but it really depends on whether that US dollar stays weak and whether the Swiss franc can continue its strength. If we get the GDP figures coming out worse than expected tomorrow, we've got a good chance of some further drop on US dollar pairs, and obviously then we've got PCE on Friday to potentially drop the US dollar further. So we will see what happens, but liking shorts on that at the moment. US dollar yen, don't know. Would rather long it than short it, but again, question mark. I'd much rather be longing CAD or Swiss franc yen than I would any other pair at the moment. So that's it. Aussie dollar, New Zealand dollar, short. Yeah, you could take that as a short. So anywhere in there, nicely extended, lovely divergence in the RSI, bearish divergence. Yeah, looks good. If you like it, take it. I personally would like to do that, but that's very, very extended, so highly likely we're, think about it in both ways. For me to get what I want, what have you got to get? what you want. Because if I'm going to get in short, get in long down here, it's got to come down, isn't it? Just because I'm not taking that short doesn't mean I don't think it's not coming down. I'd much rather be, I'm just more comfortable doing that than I am doing that at the moment on this particular pair. But that could easily come down there. Got a TP on it. I would say you're going to get one or two things happen, aren't you? Either that, or we're going to get down to 24.72. So I'd be looking for either these highs, somewhere around these highs, to act as a support. You're always looking, whenever you're looking for a TP, you're always looking for an area of support and resistance. Yeah, when price moves from support and resistance to support and resistance areas. Yeah, and I say areas, you know, it's not a level, it's an area. This is an area roughly somewhere around here, you know, not exact, somewhere around there. So somewhere around there, potentially it could bounce. Somewhere around there, it could bounce. Could, I don't know. You could come all the way down here. I have no idea. It's going to take a lot to get down there. You know, look at this thing. Yeah, that's the only time in the last 6 months we've cracked the 72. What's the chances of it getting down here? Not a lot, is it? So I would look at, think about profit take, pullback. Profit take. Yeah, everybody that's long down here is going to get out at the highs. When they get out at the highs, they are going to become sellers. When sellers start to see selling happen, they will add to selling pressure, which means that price moves down, because you've got everybody that's long shorting it, and you've got everybody that's looking to get into it shorting it. Therefore, it gets shorted fast, which is why we climb up the stairs and fall down the elevator shaft, because twice as many people do one thing and do the other. The mean reversion players are waiting for signs for that to happen. The trend traders are looking for signs of that to happen because they want to get out with a profit. So you get twice as much pressure on downward moves than you do on upward moves. Just the way it happens. It's just something, it's human nature. When things, the reason I think it happens is because of gravity. It sounds stupid, but gravity doesn't make things go up, does it? You chuck something up in the air, it falls, right? So we are predetermined and pre-programmed as human beings. And remember, this is a herd mentality. This is a market with people pressing buttons. Whether those people have got $20 billion under their button or got 40K like I have under my button, doesn't matter. We're all pressing the button. There's a human in Barclays that is pressing the button. The algorithms are going like this. You can't even see them making loads of money. The speculative traders on the prop desks and the dealing desks in Barclays are pressing buttons. They're getting in and then getting out. They're calling it up to 120 and then dropping it down to 115 and stuff like that. When they see that happen, they're going to get out. They've got targets to hit. Everybody's got targets to hit. We're pre-programmed when things start to come down to assume that they are going to come down until they hit something. So it does. It's what it does. It's just what it does. So just look for where it might bounce. So draw in your imaginary floors where you think the ball's going to bounce. We don't know where it's going to bounce, but that is more likely to bounce somewhere than it is to cascade all the way down. When it does that, something has changed. Yeah. Climb up the escalator shaft, drop down the elevator. Climb up the stairs, fall down the elevator shaft. Climb up the stairs, fall down the elevator shaft. Climb up the stairs. That was kind of climbing down the stairs in that particular case. But, you know, that is the Swiss franc rate announcement. That is everybody that bought seeing that Swiss franc rate announcement and jumping ship. Everybody that bought there is scrambling to get out as fast as they can. They'll take whatever they can get, which causes a cascade effect. Everybody that wants to get in on the Swissy is entering on the Swissy. So it just happens to move twice as fast. It's just the way it happens. So look for where it's going to bounce. Think about a ball. Yesterday's low is, yeah, that'll do. It's a level. Yesterday's low, yeah, it could bounce there. There's two types of support. You've got your double bottom support, and then you've got your resistance turn support. Yeah. You never know when you're taking a trade whether the double bottom support will hold or not. If that breaks, it's coming down to there, which is why the breakout traders trade breakouts down to support. Yeah, but that might not work. It might get down to here, accumulate, and then have enough power to mash through that, and that will just not work at all, which is why support and resistance doesn't work according to a lot of people. Because yeah, I can show you 100 times where support and resistance hasn't worked. I can show you 100 times when support and resistance has worked. We don't know, do we? But we have to have a plan. So plan to get in and out at support and resistance, because half the time it works. If it works half the time, job done. If I've got something that works half the time, I can make money. Which is, you know, when I'm saying in the boot camp, when we're position trading, let's say we're going to go long here, right? If that long doesn't work and it starts coming down, I'm planning to get in here, and I'm planning to get in here. That's my plan, because the likelihood is one of those will work. Why? Because it worked last time. Look. It worked last time, so it might work again. I don't know. What I do know is there's absolutely no reason it's going to stop there. But sometimes it does. And then all the people who are your Fibonacci traders will be screaming, that's done that because it hit the 30. Doesn't matter. I don't care why it turned. What I need to do is get into it and get out of it. And, you know, over-analyzing, analysis by paralysis by analysis, whatever they call it. Over-analyzing, overthinking is what kills everybody. Don't overthink it. I haven't looked at my P&L since I've been talking. I'm now sitting in 0.5% profit. I'm not even thinking about it. I'm in it. There's nothing I can do about that at all. I'm in it. I'll worry about it next time I have a look at it. And then I'll think, right, what should I do with this? Right now, I can close out everything, stick 0.5% in here, and take the rest of the month off. I don't know that until I look at this, but, you know, just don't overanalyze it. I don't know where any of this is going to stop. Oil, I don't know where any oil is going to stop today. But look at where I am getting out. Yeah, that's worked 4 times. I'm expecting it to work a 5th time. Why? Because between that and that, there's nothing. So is there any reason it will do anything in this zone at all? No, I can't see any reason. Look left, there's nothing. There's a candle that goes from the top of that to below that. Zero reason for it to turn anywhere but there. It's just logic. But, you know, I have no idea. It might stop here and collapse. I couldn't tell you. No one can. You know, this is why I make fun out of people in the Telegram group that say, should I go long or short? I don't know. What do you think? You're trading, not me. I shouldn't, but you know, you hear a question so many times, you have to have a bit of fun. But yeah, you know, that's my plan on it, and the reason is because that's what I think is going to happen. So looking at your trade, Aussie New Zealand, this is the most logical thing for me, or that. Yeah, but it could come and touch that wick at ADR. Yeah, if you get to ADR today, right, and you're still in it, and you get a bullish engulfing, get out. Don't get out because it's ADR. Get out because there's a reason. At ADR. Confluence. Confluence of TP as well as confluence of entry. Yeah. Why? We need a why. You're always looking for a why. But you don't know which why the bank's using. They're using one of them. We just don't know which it is. You can have two TPs. Yeah. Yeah. So if you're in short here, so let's say you enter short right now, you're in there. TP at yesterday's low. Break even on the second half. And TP the second half down there. If we're going to do an end pattern reversal, they may well come and take you out before they go down there. They may not. You may get out with half of it, and then it might scream off to the heavens, and you'll be like, I'm glad I closed that second half. I don't know. I can't see into the future. Neither can you. And that's the thing you've just got to get in your head. I have no clue. That's where I would be looking. But I don't know. I'm not an oracle. If I was an oracle, I'd be sitting on a boat in the middle of the ocean, surrounded by champagne. Very nice. I'm not. I've always thought about gravity too. What goes up must come down. Yeah, it is that exact thing. And that's what I say about the elastic band theory. Part of the course is about the elastic band theory. The bigger the stretch before the drop, the faster the drop tends to be. Yeah, that got very stretched too fast, so it pinged back. Yeah. You see things getting very extended. When something gets extended on RSI and embedded for days, that is super stretched, and the ping back will be much, much faster, which is why I like to get in above 80 and below 20. And we saw that with the euros. Yeah, I'm not interested in long in euro US dollar at all, but my God, was that extended there. Look at it. Huge extension. Look, all this, nobody, think about it, nobody that shorted this for 3 days took a profit on their positions. And when I say people, banks, none of the banks, institutions, hedge funds, anybody that took a short from that day and moved the price down to there took a profit. Then the news came out, they took a profit. Yeah, massively extended, but look at the size of the profit take. One candle for an hour. Pop. Everybody that wanted to be out of that is out of that. Everybody that isn't out of it yet will be getting out of it if we come and break those highs. Which is why I'm thinking potentially that, because they may well add into their positions back up here. I don't know. Currently in 0.4% profit. What's your target? Again, Sammy, what's your daily target? I like to bank 0.5% a day. That's what I aim for. If I can bank 0.5% a day, I can bank 10% a month. I can live on 10% a month. So, if you want to put 0.5% in the bank, you've got 0.4 there now. Put a trailer on it. You might bank 0.32, 0.35, 0.3, but you'll bank it. You can always add it back on again, can't you? Remember. But there's nothing, I'm not going to bank the whole lot just because it's 0.5%. I'd rather not take a profit today and let some of this play out, because I still think this has all got legs. Don't know what the target is. I take what I get. Exactly. You take what you get given. How much can you bank? The question I get asked, no, I don't actually anymore. I used to. The question I get asked, or used to get asked all the time, was how much should I expect to make a month? You can't answer that question. I can. 2%. I can guarantee you can make 2% a month. So if you can get a 200k account together, and if you've got 200 grand's worth of savings, I'm pretty sure you can make 2% increase on that a month. Is that what you're happy with? I don't know. You know, this is the thing. You can't say for sure what you're going to make a month, ever. I have losing months. I've had months where I've had losing months. Ukraine war, I lost money. Ukraine war. That month was a down month. And the month after it was pretty poor as well. I think it was about 7%. Because I was super scared. I started scalping, remember. I didn't position trade for 2 months after the Ukraine war. Because I had no clue what was going to go on. But I knew that the market would move intraday, so I started scalping M5. Adapt and survive, as they say. Right, so my Forex funds, good progress. So that 1.7 or something is down to 0.6. Nothing banked yet. So things are starting to happen, but I'm going to keep an eye on this periodically. I'm going out for 3 or 4 hours today, so I will look at it in more detail when I get back. But certainly looking like that Aussie Swiss is starting to play out nicely now. Born out of bed. So again here, Aussie Swiss. We started stalling there, pull back, we're ready to accumulation there. So where do I think is a likely area that we're going to get stuck today? My magic break-even line. But failing that, this is high. This is a support resistance. Previously here, we broke through it, ignored it, so it's very weak, but somewhere down there. But I'm targeting down ADR. I'm hoping they're going to come and challenge these lows today, and that will get me a pass. Pretty much. I'm looking for 1.8%. But I'll leave it running, and I'll come home in 4 or 5 hours and see if we've done it. Okay, that's all for today. I'll be back tomorrow morning. If anybody's got anything they need, come in the Telegram group. I will not be in there very much today, but I will be around later. So anything you need, come in the Telegram group. Obviously, just bear in mind you have got news at 1:30 and you have got news at 3, half an hour after the New York Open. So just be aware of the US dollar positions around those times. It won't affect anything else much, but the US dollar, we may well get a little bit of movement. So just be careful. What kind of computer do I have? Specs. Good question. Does that tell you a specification? Yeah. i7, 12th gen i7, 32 gig RAM. That's what I got. You don't need anything that powerful, but again, I use VR. That's why I've got this. But you, the most important thing with a trading PC is processor and RAM. Video card is irrelevant because MT4 doesn't render graphics, so you don't need to worry about graphics power. An onboard graphics card is more than enough to run MT4. It's mainly processor. Processor is your big one. So you i5 plus, I would recommend. You can run it on i3, but the more you run, and this is why you need processors and RAM, the more of these you run, the more dashboards you're running, yeah, the more indicators you're running, the more calculations your MT4 is doing, and processor is what does calculations. So the more threads you have on your processor, the faster the calculations get done, the less lag you have on MT4. So I'd always say go for an i5 or more like processor. I mean, 16 gig RAM is kind of a given these days because Windows takes, was it 4 or 8? 4, isn't it, I think? So minimum 8, ideally 16. So any i5 processor with 16 gig, which is why I keep saying people like Sammy who have bought Apples and are trying to trade on Apples, it will work, but for $400, 400 quid, whatever, you can go down your local electronics store and buy an i5 processor Windows laptop. That's your trading thing. And if you do want multiple monitors, virtually all laptops have got monitor outs, haven't they? You can even you can use tablets and all sorts of stuff to Bluetooth extra screens and things these days, but don't worry too much about spec. If you want to run like I do, I run multiple MT4s, multiple applications. I can run anything up to 8 MT4. Well, I can run more than 8 MT4s probably, but I can run 8 MT4s running pretty much everything full whack. There's no problem with this spec, but you don't need to. You don't need to. If you're position trading and you're not monitoring every single instrument in the market, you don't need it. I would say though, if you do want to trade futures and you want to use something like Jigsaw, that is RAM heavy and it is also GPU heavy. So if you want to use futures trading software like I use Jigsaw, that does take a little bit more, but you don't need massive spec. But if you want to play Far Cry and Call of Duty, you do. Which is why I've got a 32 gig RTX graphics card as well. No, 16 actually. I didn't go for the 32 because it's too expensive. Right, that's all for today. Anything you need, let me know. I'll be in the Telegram group later on this afternoon, sort of 4 or 5 hours time. Keep an eye on your positions. Don't worry about news today. There's not a lot happening. And obviously we'll just see where we go. But I'll be back tomorrow morning, 7:50 stroke 8 o'clock, because I have a class Thursday mornings. And then we'll have a look at everything and where everything is. But if you need anything, go in the Telegram group. All right, have a good day, guys. Hopefully it's profitable, and I will see you tomorrow.